Hi, welcome to Let's Talk Bonds, the weekly bond podcast from INR Bonds. I'm Arjun Patsati. And in this podcast, we discuss the options available for investors. And in this week's Let's Talk Bonds, we focus on the 1 to 2 year maturity bonds. That is finding a lot of interest at the investors given rising interest rates and uncertainty on rates in the current environment with the oil prices and commodity prices rising sharply on the Russia-Ukraine conflict. And with Fed also looking to raise rates, there is still a lot of anxiousness nervousness amongst investors on where interest rates are headed over the next 2 to 3 year period. And hence, they are looking at bonds and options, fixed income options, largely bonds that are maturing in the 1 to 2 or maximum 3 year kind of a maturity profile. And the options now with the GSEC yields still up to 3 years below 5.5, and the 5 years are up closer to 6% and higher, and maybe the 10 years around 6.8. 15 and 30 years over 7%. SDLs at 10 years at 7 quarter. The PSU Bharat Bond ETF 10 years at over 7% levels. You have the 2 year NBFC at AAA NBFCs like Bajaj Finance and HDFC below 6%, and the 3 year levels at around 6 to 6.5%. Um, Papers like Muthoot Finance, others are all in the 6% range for 2 year, 2 year kind of maturity as well. So there is a lot of demand for this kind of bonds at the institutional level, but at the individual investor level and high net worth who are searching for higher yields, the options are on the higher side. So you have bonds. There is a lot of flavor in the perpetual bonds, SBI, 2 year bonds, 2024 maturity bonds, slightly over 2 years. That's at around 7% levels. The 3 year 2025 maturity perpetual SBI call, all these are call options, sorry, not per maturity, call at 2025 call at 7 quarter, and the 2026 at close at 7.5. Higher. The Bank of Baroda 2027 call option perpetual bond is at closer to 8%. So these are some of the options that are available at the higher rated space. As we go down the rating curve, there are a lot of other bonds that are getting seen. So in our own platform, Quick Invest by INR Bonds, which is our app, where you can download on iOS and Android. You can see the offers listed on the short-term bonds, 1 to 2 year bonds, or even to a maximum 3 year bonds. And this includes bonds like for the 1 year, Five Star Business Finance, which pays out 25% quarterly principal repayment. This is closer to over 7.5%. While you have bonds like Ashirwad Microfinance, this is closer to over 9.25% levels. These are 1 year bonds. You have in the 2 year space, you have bonds like Swatantra Microfinance and 3 year bond space, which is at over 9.5, and 3 years TVS credit at around 8.5%. You have uh, bonds like Piramal, which is actually looking like a 10 year bond that is closer to over 10.5%. You have the Tata Motors 7 year bond, which is around 8%, over 8% levels. While you have a 5 year microfinance company like Ratan well over 11% levels as well. But in the 1 to 2 year space, you have in a latest offering, you have a 2 year market linked debenture by Belstar, which is a Muthoot Finance subsidiary. It's a microfinance company. This is for around 8.2%, well, 8.5%. And these are some of the options available, and there are a lot of other bonds as well, which are not uh, uh, which are also offered. Maybe Navi Finserv, which has been regular of 1 year bonds or MLDs at around 880 to over 9% levels. And in the private placement space, you have the bonds. You have last week you had City Corp Finance coming out with an issuance 2 year at 5.7%. You had Indujali Land Finance, again a regular issue, a 3 year bond at 7.45%. Cholamandalam placed a perpetual bond at 9.1%. Then JM Financial floated a 2 year bond at on a floating rate bond benchmark to the 12-month MCLR, and it is a bank bank cost of funds rate. And you had Neil Kamal, a manufacturing company, that issued 3 and 4 year bonds at 6.8 and 7.4% respectively. While you had SREM, an infrastructure company, and PNC, again, road projects. Both of them are road companies. SREM is coming out with 2 and 12 year bonds. 2 year bond was GSEC linked, and 12 year bond was repo linked for the PNC one. 2 year bond was issued by SREM. So these are some of the private placements on offer. So in the 1 year to 2 year and maximum 3 year space, the ranges available are clearly between 6% for the highest safety bonds, and can go all the way up to 9.5% to 10% for companies, for the microfinance companies, some of the microfinance companies. And if you can identify the best credit and NBFCs, if you can identify good credits and the best, and if you understand which credit is good for you, and despite higher yields, they can still service the debt easily. Promoter background, the ease of availability of liquidity in stress times, that largely comes from the promoters themselves. So it's very important for high yield bonds to have a good fix on who the promoters are and how strong are they in giving liquidity to their companies, or able to access liquidities. And clearly they should not be too overly borrowed. And if they are too overly borrowed at the group level, then that's still a problem. So all this has to go into investors need to factor all this when they're looking at higher yield bonds in the short term, short maturity space of 1 to 3 years. Thank you very much for listening in. Do not forget to download our app, Invest by Bond, where we list out the rate risk as well, our own proprietary risk model. So you can take the best investment decisions and invest in a seamless process for the 1 to 3 year bonds that are listed on our platform. And if you do follow us on YouTube, Spotify, Amazon Music, and Apple. Thank you.